Sponsored by Centavos. Keep more of your money.
Welcome to A Cup of Jess, where today you get Jess, not the cup.
Yeah, no cups
So
today.
no cup today, just a cup, just Jess. So today we have Eduardo Guitierrez in our episode. I'm excited to have you here because I know we've been collaborating and chatting regarding that business language. So I did wanted to give a proper introduction to Eduardo Guitierrez. He is a chief financial officer of Iron Grove LLC, a Houston-based technology company focused on enterprise infrastructure and software development. Eduardo has a background in finance and capital markets with experience at JP Morgan's, Charles Schwab, and USAA. Since 2015, he has participated in over 17 million in mergers and acquisitions activities. That's interesting. Working with founders and investors on business growth and transaction strategy. Eduardo holds a bachelor's degree in business administration from Indiana University East and maintains multiple financial and real estate licenses. Today, he focuses on helping entrepreneurs build long-term enterprise value through ownership, real estate, and strategy, and scalable businesses. That is totally my love language. So talk to us.
All right. Well, thanks for having me, and I appreciate the nice setup you have here. This is a nice studio here.
Thank you. No, honestly, I'm thankful for the team that I have as well. Her media team. We have been working together, and they're the ones that are in the back end doing everything.
Shout out to y'all.
So I wouldn't be able to do it without them. They're the ones that keep me on my toes, and believe that we needed to speak about everything, right? And that's where A Cup of Jess started. And not only I want people to know about the taxes situation, the accounting and bookkeeping, but something that I loved when we met and we started collaborating together and chatting is that you have all this experience in, starting a business, growing a business, and then how to exit a business, right?
Yeah, but I think the most thing is what you bring to the table for any business, because accounting and bookkeeping is vital. And so, when we go into a business, we usually have a background of, we understand the business, doing the work of the business, but there's a whole nother section, and that's making sure your books are kept up, your accounting's done. So when I started my first business when I was very young, I probably got into a lot of trouble because I was making money, but there was no paperwork. And, I went to my mom at the time and I was like, Mom, give me a hand. And she said no. So, so that was my
So in
first.
paper, you were poor.
Well, I mean, in the bank account, I was doing great. But I mean, from a business standpoint of keeping my books, my profit and loss, I was creating a huge tax liability that I didn't, I was too young to understand.
Correct.
But it wasn't long, the county started sending me notices, and it felt like everyone was coming after me for something.
Right.
And
That is crucial because a lot of business owners, they feel so overwhelmed and stressed because they're so focused on sales operations, right? Running the business, but then they don't know about deadlines. They don't know about the notices, the mail. Like you as a business owner, when was the last time you checked the mail for all these notices, right? So that's where you create the systems.
yes, and ultimately, I think that if you are going to consider starting your own business or doing your own thing, it's important that you establish a relationship with an accounting bookkeeping company early on. And obviously, I'll plug my friend here. She has a great business. So, but ultimately, that is of the utmost important, because I think that that'll help make your journey a lot more smoother, and you won't be, I'll quote myself, be a young guy or woman starting their business, and ultimately, when you get overwhelmed with the paperwork or the tax deadlines, and you've created these liabilities for yourself, then ultimately, you'll do what I did, and I just went back and got a regular job again.
Right. Can you tell us about your trajectory of businesses, like the first business that you created? How did it go? Then you got to also tell us about the big business that you are working on as a startup. So
I was watching a podcast once, and there was a guy that's now in the media, Ty Lopez, and they asked him, like, what was your kind of worst business deal? And he looked at Grant Cardone, and he told Grant he didn't have any bad business deals. And Grant kind of looked at him in shock because, if you're in business, there is a learning curve. And unfortunately, there are things that happen, during the course of running a business that aren't always positive. But what I found, as long as you move with good intentions, you're never intentionally trying to harm people or do wrong, that those everything kind of works itself out. So, you know, I guess one of my biggest first acquisition, leaving. So I left J.P. Morgan in 2015, and it took me 8 years to essentially build a book of business of 153 million in client assets, and essentially overnight I had to start over.
Right.
So I transitioned to Ameriprise, and I remember I was like, okay, here we go again, and I even have a photo of myself, and I look pretty bad. I mean, because
It's tough.
yeah, you're getting pushed out the nest. I mean, you went from kind of having a paycheck, maybe you had insurance all set up, 401k match, you had
Right.
all these things, and now, it's on you and what you can do.
So you speak about that transition, right? That you were just pushed out the nest.
Right.
What were your thoughts at that moment as coming out, you were just like, I got to keep up my head up and keep up going. What were your thoughts, or what did you do to get out of it?
So, so I think it's important just to kind of recognize like your emotional state at some point, and kind of, as they say, give yourself a little grace, because if you are going through a tough time, especially, leaving a W2 position unexpectedly, I mean, it's important to understand that you are going through a situation, but kind of limit what you do every day to make sure that it's very important. Like, so for me, I saved all my energy for that next meeting. So every day is I had the energy for that meeting, and to ultimately land on the firm that I landed at. And so I started naturally rebuilding my book of business, and I was about 17 months into the transition, and I got a phone call from a person that I was officing from, and essentially he said that he was transitioning firms, and his business was for sale. So for me, my first kind of M&A activity was a purchase, and it was a $6.2 million acquisition where I purchased another wealth management firm.
Wow, that's impressive. And you've also purchased accounting firms as well.
I have, yes, and in one year we essentially acquired 6 accounting firms over 2 different states, and we also purchased some real estate along with those acquisitions as well. So that's a lesson I've learned on that one, that that was kind of outside of my normal business in terms of the CPA practices, and I did have some partners that I kind of had to lean on. And I think that ultimately, learning from that experience, I probably want to either make sure that my partners are a little bit more, I would say, trustworthy, and or I can take over the business if I needed to, because things happen in business. That one didn't work out quite as I hoped, but is that going to stop me from doing another acquisition or maybe looking at another target? Absolutely not.
Awesome. So for the people that, I know we're speaking about acquiring or purchasing businesses, what are your thoughts about building a business? Key points.
So I think that's the probably lowest stress way to go about ownership, is to build a business. I think that if you're working at a job for 3 to 5 years, you're not going to learn much more. I mean, you pretty much got it. I mean, whatever you needed to know during that time, you've picked it up, and that would be the time to, if you are considering, kind of running your own shop or doing your own thing, I would say that you have enough experience at that point.
Right.
And I think that your transition from working for somebody can be very easily done as long as you have the right accounting team. So if you had someone like Jess on your team to help you do the paperwork and registering your LLC, getting your EIN, what kind of business, S corp, C corp, she can answer, and her team can answer all those questions really quickly. So I think if you have the right person, and you pretty much, you've got a skill, now you want to do it on your own. If you partner with the right accounting, bookkeeping team, that transition would be so much easier.
and having a lawyer by your side, which
Ideally, you shouldn't get into a lawyer situation and obviously when the numbers when you add more commas and more zeros, and yes, I think legal advice is important. But I don't want to discourage anybody from running a business. And honestly, if it's just if you're transitioning, you're taking clients, then I think things could get a little messy, and then you should expect a cease and desist and some things like that. But
right.
but I think having the right accounting and bookkeeping team with experience could probably tell you whether or not you need a lawyer or not.
And like you mentioned before, income pays the bills, but ownership
Builds
builds
wealth.
wealth.
That's right. So I think that most people focus on their paycheck, like their income, how much money's coming in to pay for your car. But what they don't see, and one of the benefits of having ownership, is you're actually building something that you can sell at a later date. And so for me personally, I worked 8 years at JP Morgan. I built a great business, but when I left it, and there was nothing there for me. When I was at Ameriprise, I acquired my first business. 5 years later, I grew my 50%, the valuation of the whole company, to about 11 million. So at the end of my tenure there, I exited that business, and it resulted in a quite nice set of, I guess, income or wealth for myself.
Correct. So when do you think, or the margins or the cash flow, where somebody, for example, that second layer comes, you're build your company, now you're in layer number 2, which is owning the property or your building?
Yeah, I think after you make that decision that you want to run your own company or business, the next easiest logical step is to own the property where you're operating out of, because it's basically a stored way of capital. Think of it as a piggy bank. So it's a way for you to put money towards your business. You're already working. You're either paying rent to somebody, but in this case, you could be paying rent to yourself. And Jess and her team can help you with structures, because essentially you would still have your business, but you would have a separate entity that the property owns it. Technically, you own that too, but they're technically running two businesses side by side, and there's some tax advantages to structuring that.
Absolutely. Which commercial property is not even, it was overwhelming to me, but once I spoke to you and we looked at numbers, looked at comms, it's not that hard. It's just literally making sure that everything's structured. You have your financials in place, that credit score, but then it's the cash flow.
Well, I think for most people, I think it's kind of like they want maybe bigger than what their business is at, because there could be a property solution for somebody that doesn't necessarily have to be the Taj Mahal. It might not be everything you want, but I always believe like you should start as minimal as you can.
Correct.
And then as your business is growing, then you make the right logical investments. So I think that you could start off with a smaller property that doesn't exactly fit your needs, but it fits your budget.
Right. And what's something that you would recommend? For example, I'm in the case where I have my firm and I want to buy a commercial property. Is there anything that you would advise me or anybody else watching or hearing this podcast that they're already maybe 6-7 years into their business that they need to either start doing or stop doing in order to take that next step or take their business to the next level, buying that commercial property?
So I think when you look at from a lending standpoint, the Small Business Administration, they have different programs that you could look at, but one of them is the 7A program. So as long as you are owner occupying at least 51% of that property, they kind of look at that as a lower risk loan.
Mm-hmm.
So that would help with your approval of getting that property loan. And usually, depending on the situation, you're looking at a down payment of 10-20% of the property value. But all lenders are different. So just because the SBA has a certain guideline, and that's the Small Business Administration, each bank has their own specific guidelines they can put on top. So I would definitely suggest, if you were looking for any kind of business loan, to reach out to at least 3 different lenders, because it can be a very frustrating process, but it's rewarding, especially when you get a deal done.
That's very, very important. And I know you've also have the context that you can provide and help clients in that way. And I know we've spoken about two things. One is the business side, and two is the commercial or the property, the real estate side. But you have your expertise in building businesses, purchasing businesses, and also exiting businesses. What makes a business attractive to an investor?
So I think the third component, is to build an enterprise. And you had some guest speakers on earlier, and I heard them talk about, one of their biggest challenges, is paying labor, because as they're growing their business, they're also having to make payroll.
Correct.
Well, so when you're kind of a solo entrepreneur, you can have pretty high profit margins in your business because you're doing the work, and you maybe have a 50 to 60% profit margin. But as you start to incorporate staff and you start to actually exit the business where you're not doing the work, you'll see your profitability start to go down. And then at some point, you have to work through that period and accumulate more clients, and then eventually your revenues will kind of make up for that. But the benefit to doing that is now that you have enterprise value, where your company's value is worth something. And I've gone, met with some business owners with great businesses, and I'm there to purchase their business. And the first thing they tell me is, this business won't operate without me. And that makes it a little difficult, because I'm trying to buy the business. You're saying you want to retire and it won't run without you. Well, that doesn't sound like a good buy to me. So I think that's one of the understanding that you have to have, that if you want to build an enterprise, the business does need to perform without you, but it needs to be a good thing. It means that you've put systems in place, you have the right staff in place, you have the right management in place, that the business continues to grow and thrive, and then ultimately you can work on other facets of the business while maybe the daily operations are being handled.
That is very crucial on the business side and as a potential buyer of a business. So what do you advise? Like, for example, SAS.
Yes.
A lot of people come to me, they want to deal with me. What do you do on those cases, or what do you advise the owner? Because there might be other owners out there that, hey, eventually I want to have an exit strategy for my business, but I'm the one that, I'm the director of the orchestra, technically.
So a lot of times
you can be honest.
I will be honest. You got to put your ego aside at some point.
Yeah.
Because I remember when I bought my first company, the gentleman, we were going to celebrate over steaks, and he said, my clients aren't going to deal with anybody but me. And I doubled his business in 5 years. So that wasn't necessarily true. So I think that you can have good intentions, meaning that you want to help as many clients, but your clients will also have to understand that you need to grow the business, and that means sometimes stepping out of your role.
Correct.
But you should still be present in your processes and procedures.
Correct.
So just because you're not there doesn't mean that the person you pass the baton to shouldn't hold your same ethics, standards, work ethic, everything that you've done to build your company. You have to be the one to pass it on, through your training, through your mentorship, through your processes and procedures. And I think that
the training manuals and all that good stuff.
Yeah, but your clients, they do want the best for you. So I think they want you to grow.
Right. And that's something that I feel now that has happened, is that here at SAS, we have implemented policies and procedures, operations, SOPs, right? But sometimes clients don't like that change. It's like, wait, what's going on? Like, I have to go through a portal. What? I have to upload documents. So change is always good, but then there's people that don't like change.
I mean, I remember in wealth management, there was a time when the IRS, not the IRS, Social Security quit paying individuals with checks. And, you can imagine the Social Security, at the minimum age, you're 62 when you're getting that check. So they transitioned to having to do direct deposits, and some of the most technology challenged individuals at the time, they adapted.
Yep.
So my challenge to you would be to say, like, if what you're doing is in the best interest of the client, being efficient, that's helping with them. You as the leader of you have to push forward.
Correct. And I have to follow through because my team is like, hey, you uploaded this? Have you told the client to go through the portal and all that good stuff? And at the end, I love it because, for example, this morning I had a client that she's been with me forever, and she's like, hey, Jasenia, I'm here to do my 2025 taxes, but you know what? IRS is stating that my 2020 haven't been submitted or they haven't received it. And I kind of had like a freak out moment. I'm like, did I submit that tax return? Where do I go through my systems? But guess what? I looked into my CRM. It was there. I'm like, here's your 2020 tax return. You can also access it, download it, send it to IRS. So it makes the job easier, more organized. And clients need to understand that there's going to be change, but it's for better.
Absolutely.
Yeah, and
Yeah,
more organization.
Yeah, it's for their benefit. I mean, if you have an electronic filing system where all your files are being kept and you can access them day or night, I think that that's beneficial. And yes, but one thing I did learn, and we all learned through COVID, is that now people are communicating with technology. You know, you have grandparents who were forced, if they wanted to see the grandkids at that time, they had to learn how to use that web app, and they're doing it now. So, you know, I have a feeling that some of the people that are pushing back, if given enough time, they'll really appreciate what you've done.
Absolutely. So I know we're speaking about now COVID came, change it up, and we're entering that AI era. Tell us a little bit about your startup. As you already know, I do also have a startup, which is Centavos, a fintech app, but we would want to know a little bit about your startup. Tell us about.
It's funny that you bring that up because so we have an infrastructure company where we build a physical network where we have our own IP addresses, and we have this network that we can translate data throughout the globe, and which is a very important piece. But what I found is some of the people that we're talking with, they're like, well, we don't even have a website. And it's like, okay, so you can't get to our technology because we need to do first things first. So we literally this week rolled out a program called Zero to Hero, where in just a few days we can get people not only signed up to use our global network, but we can set up your website. Very functional things. Set up your website. Make sure that you have proper email, and if you want to use say Microsoft 365, you have that. If you're a bigger business, we also have a partnership with a company that can do like your day-to-day transactions in terms of your doing checks on the health of your machines and things like that. And then we even have the last step that we've incorporated with an AI company where you can maybe take documents and things like that, put them in and have AI do some work for you, which I think is very helpful. But I'm looking forward to teaming up with Centavos because I think it's a great thing what you're doing. And I think that it's important. The financial literacy is important. But I think at some point, I think that's just the beginning. I know as you develop your app, it's going to be so much more.
No, and I know that you and your team have also given us your input on it, and it's something that it's gonna go hand on hand. Tell us a little bit about VCs. I know that as a startup, we both have a startup. We are looking into the venture capital. A lot of people don't know what is venture capital.
Yeah, so venture capital, they I would say they're probably the sharpest tools in the shed because I mean they deploy billions of dollars, but they have their own language. So I think it's important to kind of understand that if you're at a place where you're trying to raise capital, it's like I said early on, if you're starting a business, have a good bookkeeper. If you're at a place where you're doing a startup and you want to raise capital, it's important to have the right resources around you.
Right.
But we have a network here. I mean, the Ion building down near downtown, the old Sears building. I mean, they have a network of IT group that meets every Friday. It's free. It's called Cup of Joey, not Cup of Jess. I prefer Cup of Jess. But if you're in the IT space, there's a Cup of Joey for you. And I mean, you can meet the contacts. But I think what you can't be is you can't be shy. You have to look for resources. You have to ask. You have to tell people what you're working on, and you'll be surprised what resources will come your way.
No, and it's for me, and I'm gonna be honest, it was a little scary because I, as a Latina, as a woman, VCs, let's be honest, they invest into a Latina owned business, or there's like a what, a 2 to 3% chance. But right now we're at South by Southwest, and it gave me a little bit of confidence because they're like, don't look at those numbers. There's so much opportunity there, and like it's absolutely amazing. And like you said, it's another language. And for me, you tell me, okay, where's your pitch deck? You could have asked me 7 years ago. I would have been like, what a pitch deck? What do you mean? Or and all another point that you touch is their language. I had to learn to know how to pitch, what they're asking, having the numbers, because you have to think as of an investor. How are you going to make my money fast and secure, right?
Well, they have specific metrics that they're looking for. And while only 2 or 3% of companies may get funded, if you do what's necessary, you could be 100% funded. So I understand that only 2 or 3% of companies are getting funded, but that tells me that those are the small amount of companies that do what they need to do to be funded.
Right.
And
you study them.
well, yeah.
What are they doing that we haven't been?
It's all there. I mean, it's a certain amount of of users, maybe a certain amount of monthly revenue they're looking for. Do you have intellectual property that you've got a patent on? So there's all these things that they look at. That's all out there. It's all I'm not going to say it's common knowledge, but it's available. So if you have the right people around you, you'll know what it is, and then you can build towards that, and you could be 100% funded.
Awesome. Can you share a little bit about what your ideal client is for your startup?
Yeah, I mean, if you have a website, we're here to help. So I mean, so we have kind of two sides of our business.
Okay.
We have a very simple. We can host someone's website, run their network, access to that website. But then if you're, say, a larger company, our head architect, he runs millions of web hits to a very, very notable website. So that's where our architecture comes from. So from a family website to you're a big company and you want to resolve some sort of global traffic problem you're having, we can resolve that too.
Thank you so much. Honestly, it's been a lot of information. I hope this is not our only episode. We'll see if we can have you. We'll have you next time, and for more information that you bring a lot of knowledge. And I want to say thank you for being here and accepting our invitation at A Cup of Jess. And remember that his information will be as well in the link below. And if you guys have any other questions, please DM us or send us a message for us to have that information for you. So again, thank you for joining A Cup of Jess. Ed, thank you so much for being here.
Thank you. Thank you.